Well, good morning, everyone. And thanks for coming. As you know, first quarter is our first indication of how we're doing compared to budget. It's also our first chance to track the progress that we've made since the end of last fiscal year. And today, this update also demonstrates how well we're building on the good results that we reported at the end of June. What you'll see today is the result of the government's plan, which began with Budget 2013 to realign our province's finances, and I'm happy to say that we're doing very well. The first quarter of this fiscal year picks up where the last year ended. Both our economy and our population continue to boom. Alberta has surpassed 4 million people, and we're well on our way to an expected 5 million people in the next decade or so. Our revenues are strong and are higher than forecasted budget, and at the same time, we've continued to keep our spending in check. And just like at the end of the 2013-14 fiscal year, we ended this first quarter in a very strong surplus position. And with another solid fiscal showing and a strong economy that continues to grow, we're sustaining our momentum. Now, Albertans, ministries, and the public service have worked very hard to gain this momentum. It's not luck that got us here today. It was the commitment of this government to a new way of doing things a year and a half ago. We developed a balanced fiscal plan that has put the brakes on unsustainable spending growth, that has increased our savings, and that is building the infrastructure our growing province needs. And by following this new path, we're opening our province up to more opportunities and to more choices. In fact, thanks to the course that we've charted, Alberta's strong finances now give us choices that other places simply don't have. Today, Alberta is in a position to focus on a number of priority areas that Albertans have told us are important. We are continuing to invest in priority programs and services, even as we continue to save for the future. And we're investing more cash into building infrastructure, which is reducing the amount of money that we're borrowing. Albertans have told this government loud and clear that we must continue to build the infrastructure to meet the demand for schools, hospitals, and roads that we need now. They've been comfortable borrowing to build, as long as rules are in place to limit this borrowing, which we have. They've also told me that if options exist to reduce the borrowing while still building and meeting our spending priorities, we should then give them a close look. And now, thanks to prudent spending and strong revenues, we are significantly lowering our expected borrowing for the year by almost $3 billion. Our strong fiscal position is the envy of others, I would say worldwide. We started the year in the black, and as you can see, we are expecting the numbers to keep improving. I can say with confidence that I believe we've turned the corner financially. We closed the books last year with a fiscal plan surplus, and we still expect a surplus in 2014-15 and continued surpluses over the next couple of years. When it comes to Alberta's economic indicators, everything is looking up. Our GDP growth rate is now 3.8%, slightly higher than forecasted at budget, and continuing to lead all provinces. Our population growth rate is up, which was already the highest rate it's been in 30 years, and the highest in Canada last year. Alberta's employment rate is high, much higher than the national rate, and we're expecting continued growth in 2014. The consequence of higher energy prices and population growth, which brings higher prices for food and shelter, has increased inflation. So we've revised the forecast for consumer price inflation from 2.2% at budget to 2.6% after the first quarter. And these increases comes after 2 years of very low readings, just over 1%. Even with the increase in inflation, inflation remains below other periods when Alberta experienced strong economic activity, as we saw between 2006 and 2008. So it's safe to say that Alberta continues to be in the sweet spot economically. As you recall, Alberta has been outpacing Canada for a few years now, leading all provinces in real GDP growth since the recession. This growth is a reflection of a stronger than expected labor market, continued migration into the province, and accelerated activity in the business sector. Growth is projected to remain strong. We don't forecast for other provinces, but private sector economists expect Alberta to continue to be among the growth leaders this year and into the next. In the first quarter, we're enjoying strong revenues across the board. We're seeing higher forecasts for oil and gas prices, and corporate income tax revenue is higher than expected. As a result, we're now forecasting revenue to be $45.3 billion, which is $915 million higher than is estimated in the budget. Energy prices, of course, have had a big impact on Alberta's bottom line. The experts in my ministry continue to work with Canada's best economists to come up with the most accurate assumptions possible. We were in line with the private sector forecast at budget, but it looks like all should have been a bit more bullish. We've revised our key assumptions to reflect how we expect the rest of the fiscal year to shape up. It suffices to say we're moving in the right direction. Higher energy prices, of course, mean higher revenues, but that does not mean that we'll be turning on the spending tabs. This is only the first quarter of the year. We continue to be fiscally prudent. Modest spending increases are for areas like $92 million for the endowment fund expense, primarily because of the Access to Future Fund grants, which have been unfrozen. $57 million for the Canada-Alberta Job Fund, which is offset by new revenue from the federal government, and $41 million to combat the mountain pine beetle. And we continued the work of recovering from last summer's flood with flood assistance increasing by $74 million, and this is mainly due to reprofiling of funds that were not spent in the last year. And despite this modest increase in operational expense, we're still keeping spending well below population growth plus inflation, just as we did last year. So we're going to stay on this path of fiscal prudence because, quite simply, it is paying off. I want to take a moment to highlight the changes we made to the quarterly update report format, and these changes were made to include the Auditor General's recommendations as well as others. The report includes our forecast for the balance sheet and expected borrowing for the year. It also includes detailed actual results, as we've done in the past, and full-year forecasts for revenue, operational expense, and capital spending. And as we did for the last annual report, the update clearly outlines the operational surplus, the fiscal plan surplus, and the fully consolidated surplus. This hybrid approach provides the most comprehensive financial picture that we can paint, probably the most in the country. And at the end of the day, no matter how you analyze the numbers, our strong surplus position does not change. Alberta is on solid financial ground and will continue to be going forward. So there's no question today's update includes some great results for Albertans, but Albertans aren't the only ones who are noticing our strong economy and positive fiscal situation. It's obvious by the tens of thousands of migrants who are arriving here seeking our many jobs. It's also clear in what others are saying about us, like the Conference Board of Canada, a very positive report. We've got a healthy and growing economy, sound fiscal management, and we're on the road to long-term success. We did not get here by accident. We made thoughtful, deliberate, and sometimes difficult decisions, and we took action. Those actions have put us in a position where today we are the only jurisdiction that can say we're increasing capital spending. We're on track with our operational expense, and we're borrowing less. We will continue to focus on what's important to Albertans: fiscal responsibility, building needed infrastructure, and investing in core services like health, education, and support for the vulnerable. The bottom line, as I said, we've turned the corner financially, and Albertans can be confident that the government will continue to make our province the best place anywhere to live, to work, and to invest. Thank you very much. I'll take questions.
Were you getting a lot of criticism for the debt plan, $21 billion in debt by 2017? Were Albertans concerned about that?
Actually, in all of the town halls that we did, and frankly, I'm pretty sure I was the first finance minister that went to open mic town halls across the province. When we described the borrowing profile that we were looking at, the schools, the roads, and the hospitals we're planning to build, the debt repayment plan that we have in the budget, all of the rules around how much we can borrow and the limits and caps to that, and the fact that in the fiscal framework where any surplus dollars can go to the capital plan, they can go to savings, they can go to anywhere we want. Moving to a 50-50 balance is something that people said, if you can get there, go there. But the idea of borrowing actually came out of all of those town halls as being the prudent choice to go, because you don't want an infrastructure deficit again.
Might take this money then and put it towards capital. If there's the general appetite for borrowing, why put it towards
We're still borrowing.
Offsetting? No, I know that, but why offset the borrowing?
Well, you want to maintain a balance, and what we moved to 1/3, 2/3, now we're moving to more of a 50-50, and I think that's prudent. Wow.
Are the
Much different than last week.
are the family
Not the mayor of
clinics,
Gibbons. Not that Doug Corner.
are the family clinics that Alison Redford talked about in the last election still in the budget?
Well, the capital plan, actually, there's been no projects removed. There's been no projects, no real large projects added into that as well. So all of the capital plan projects that were there before are still in the capital plan.
Where's
So
the
that would
bulk,
mean yes.
Yeah.
where's the bulk of this $261 million in extra operational expenses going? Salaries?
Well, the bulk of the operational expenditures in terms of the 338 you're talking about?
The 261,
Yeah.
operational expense.
For the year, for the quarter you're talking about, right?
This would be, I think,
You're talking about for the year, probably the forecast. The majority of the increase that we have in the first quarter is actually related to the endowment fund for Access to the Future. It's for the pine beetle, the $41 million that we have allocated for mountain pine beetle. And then there's some reprofiling that's happening within because you've got dollars that, timing issues really with grants going out or salaries grant salaries being paid out in this quarter, not the next quarter.
stuff that was not foreseen at the budget time.
No, mostly timing issues. On the endowments, it's when we froze the endowments, we were waiting for a better financial picture before we could unleash those endowments. So the Ministry of Advanced Education and Technology is going to be talking to the post-secondaries about how they can catch up on some of that. Because it was frozen 3 years ago, I want to say. I think. So that money's been accumulating in the fund, and now we're releasing that money.
So why did you make that decision to restart the Access to Future Fund matching payments? And how much of an investment have you made compared to the donations that are made?
That's something the Ministry of Advanced Education probably is in a better position to respond to, but the reality is there was a $45 million annual allocation from the fund that was frozen. We've released that allocation. That's where you come up with the 92.
I think we have a question on the phones from McDougall Center. Operator? Do you have a question on the phone?
Hi, this is Carrie Keaton from the Globe. I'm just wondering why this is considered a more conservative budget when the total revenue went up, but so too our total expense.
Well, total expense did not go up as much as total revenue, and obviously that's one piece because our surplus is rising. The reality is a lot of the expenses I just outlined is part of the capital side of things and the endowments that are moving out. The reality, again, is that we're maintaining our operational expenses well below population plus inflation, and the rise in operational expenses is quite small, actually.
Would those expenses have increased even if the revenue had not?
Quite likely, the marginal pieces that we've got in here, some of them are, again, carried due to a timing issue as opposed to something that might be an increase. You'll see a decrease in some of the future quarters, but the overall increase for the year from the budget perspective of 328, big portion of that is actually in endowments.
Okay, and I have a question on the natural gas royalties, the natural gas and byproducts. One of the things companies are spending big on are the natural gas byproducts, the LNGs, and Alberta had been looking at this as a place where revenues would come in. Is it a concern that the natural gas liquids have fallen off and you had to decrease your royalty prediction there?
Well, we decreased it by about $35 million on about $1 billion or $780 million worth of royalty. So again, that's a forecast for the rest of the year. You'll note in the first quarter it's actually up a significant amount, about $80 million. So when we look at the first quarter actuals, we're still fairly well on track. Projecting out for the rest of the year, again, first quarter projection. I wouldn't get too excited yet.
Okay, thank you.
Yep.
You were saying that you didn't get here by accident, but you're still relying on oil and gas revenues and bitumen is up. So is it an accident in a sense that you got more money than you expected because of prices?
The difference here, Graham, is that there may be more money, but we're not opening the spending taps. We're also looking at where we have corporate income tax is rising fairly significantly, and I would point back to some of the previous press conferences where we've talked about manufacturing. The manufacturing sector in our province is actually growing. The revenue piece of non-renewable resource revenue is actually dropping a bit from past years. When you look at the balance of GDP growth in our province, yes, we're still an energy commodity province, but agriculture is doing well. The manufacturing sector in our province is doing exceptionally well and growing. Personal income and corporate income is growing, even though the rates have not changed. We haven't raised those rates, but the dollar value is raised because the economy is growing. Housing starts are the strongest in the country. When you look at the Conference Board of Canada or any of those other economists, what they're looking for is the economy functioning in all cylinders? In other words, are you building houses to meet the demand? Are people coming to your province? And that's very, very positive news for Alberta. That's because of a strong economy, low tax rates, a good place to do business, and frankly, the engine of the Canadian economy. So there's a balance of a lot of different things here, but it's good. It's
Politically, is this going to help then your party politically.
I don't do this for political reasons, I do it because I'm the Minister of Finance.
Come on, you're a politician.
Well, I'm doing my job, and I think it's very positive news for Albertans. They should be proud of the province that they've created. I think they should be proud of the fact that we have the best financial situation, I would say, in North America. The only jurisdiction with net assets of some $46 billion. This is something to be very positive for Albertans as a whole.
So why did you change the budget fiscal update format now?
Actually, it still has the savings plan, the operating plan, and the capital plan. It still has all of the elements that I wanted to move to, which we've done, which has actually gotten very good reviews from the financial community. We've added the piece that the Auditor General recommended us to add, and that's one of the reasons why you see the such sector adjustment for the consolidated financial statement. That's something that we consulted the Auditor General on between year end and first quarter, which I said I would do. And so we've added this in to work with him on the recommendations.
Do you think you were wrong to take that out initially to change the format?
This has never been in there. This piece of the consolidated such sector estimation only used to come in at the end of the year. And that was one of the things that we've talked to the Auditor General about. It's very difficult for us to project what the such sector is going to do. So we haven't actually put that in. This has only ever been in the year-end statements.
But you departed from the age-old way of reporting deficits. And people couldn't find the deficit for a couple of terms there.
Well, we've come for a long ways from that over the last couple of three quarterly reports. We've been reporting the fiscal change in terms of the operating surplus and the net change in assets in all of the last quarterly reports. So this is not new. That's not the new piece here. The new piece here is the forecast for the change in budget and the Auditor General's recommendation.
There's been a lot of criticism on this. Do you think this will address it fully?
This is the public sector accounting standard. As I said, the Auditor General wants us to move to a fully consolidated estimate, which is what we've put into the budget. You'd have to ask him that.
Operator, can we take some more questions from the phones, please?
Your next question comes from Mark Petterone with Sun News Network. Your line is open.
Yes, hi, Minister. On a personal note, this may very well be your final fiscal statement. Do you have any thoughts about that?
No, not really.
Do you feel that, in fact, it will be? Or ever enter into your thinking that, in fact, you might not be doing this a whole lot longer?
I think everybody that is in cabinet should be thinking that in terms of every year that they're in cabinet. You serve at the pleasure of the Premier and you serve at the pleasure of the people of Alberta. So every 4 years I think about that.
Is Mr. Prentice committed to keeping you in this portfolio if he becomes Premier?
I've made no commitment, nor have I received any commitment from any of the candidates.
Do we have more questions on the phones?
Your next question is from the McDougall Center. Your line is open.
Minister, it's Don Brady from the Herald. Do you have any concern, let me ask you first, do you see a leveling off in housing costs, both to buy and to rent in the province? It says, I'm sure you know, getting extremely difficult for younger people to buy and in many cases to rent, whether it's from Fort McMurray to Calgary, it's almost a province-wide problem.
Well, and as the report suggests in the economic outlook, on the residential market is surging. There's strong gains in income and population. The rental market is going to remain tight. But as I said earlier, in response to Graham's question, our housing starts are solid. Our economy, in terms of that kind of activity, is very solid. Starts are up over 8.9%, which is something that I don't think you'll see across the country. Particularly strong in the Calgary marketplace. As we continue to be the economic generator of jobs in the country, obviously you're going to put some more pressure on that. We're going to be monitoring that very closely.
But you don't see a leveling off in the rate of increase in both housing, new and used and rental?
Well, our forecast for housing starts has actually been bumped up because of the investment that developers are putting into that at this point. I would say that there's probably, in our market, in our economy right now, dependent upon what area you're looking at, because it's different. The condo market's different than the detached housing market, et cetera. There's a pretty close tie to supply and demand right now. So is it going to be tight? Yes. Are you going to see the kinds of things we saw in '05? Probably. I don't think we're looking at that type of inflationary pressure.
Thanks.
Okay.
Do you have any idea when the demand for oil is going to start to drop off, when the American demand for oil is going to start off? We hear a lot about the Americans being, close to self-sufficiency. The pipelines are, stalled, it seems. Rail can only carry so much. I mean, is there a contingency there for a drop-off in the sales of bitumen?
I think, one of the things that we've been saying all along, market access is one of the 2 or 3 critical points for not only the risk to Alberta's balance sheet and economy, but also in terms of Canada's economy. Market access is a huge issue for Albertans and Canadians. We see the takeaway capacity tightening up based on the production numbers that we see from the industry, tightening up to a very difficult position in the 2018-19 timeframe. It's our hope that there's going to be some other outlets that we'll be able to utilize. There's been a lot of work done in terms of pipeline reutilization and some changes to the pipelines. Obviously, rail has moved up considerably in terms of how much it's going to be shipping, estimates of 1 million barrels a day. So we're watching and keeping a tab on all of that. But I would say that our horizon of 2018-19 is where we're focusing a lot of our attention right now.
Sorry, so what is going to happen in 2018, 2019?
Production's going to continue to climb, takeaway capacity is going to get tighter, and we're going to have to, between now and then, we need to work on market access so that we can ensure that we have more takeaway capacity coming into the system, whether that's by rail or new rail or by pipeline or by other methodology of the utilization of the pipelines. Those are the things that the Canadian government and the Alberta administration are going to have to be working very, very closely on. Because it isn't just about Alberta. It is about the Canadian economy. When you consider that Alberta is creating 80% of the jobs in Canada, when you consider that we are, the main contributor to the Canadian economy, this is an issue that is national. So.
One question that came from City Hall, and it deals with the Stantec Tower yesterday. Are you getting out of the CRL business?
Well, actually, I was listening to some of the commentary about the CRL that we approved and how positive that was for that project and how it's going to be able to make the payments for that over the next 20 years. So I think that's quite a positive piece. I think each one of those is looked at individually by the Minister of the day and the Cabinet of the day, and I'm very pleased that we were able to put that forward for the City of Edmonton. I think it's going to be a fabulous development.
The complaint I'm hearing is that rurals aren't big enough to take advantage of that sort of thing, so they see the government losing 1/3 of its education tax revenue that is going to the cities because of it.
Well, I mean, if you're going to tie it to dedicated revenue, yes, but that's not really what's happening with the education budget. We have a global budget. We distributed that based on the formula that's in the education department. There isn't a loss to the education budget because of that. What we're looking at is investment in our major cities, and we think that's a positive thing. So. Anyway, thanks very much, folks.
Question on the pension reform, please.
Oh.
Can you provide us with an update on that and tell us whether it's still the intention of the government to reform pension, even so?
It's in the all-party committee right now. We're waiting for them to come back with their recommendations. You'll note that the such sector adjustment that we had to do last year was due to the pension plan utilizing new mortality rates, and it cost a considerable amount of money. I think there's some information to be taken from that as well. So we'll wait and see what the all-party committee comes back with. Thanks very much, folks.
Thank you.